All right, everybody, welcome to the DealGen podcast, where we talk to investors, entrepreneurs, and business titans about a wide range of topics and experiences. The DealGen podcast is brought to you by DealGen Partners. DealGen Partners is the leading deal origination service on the market for private equity buyers. DealGen Partners combines their M&A and private equity experience with a proprietary method of multi-channel marketing services that they call the Bird Dog. This unique recipe generates transaction-ready deals at an unmatched pace and increases a private equity fund's chances of closing a deal by up to 10x. Reach out to DealGen Partners before you begin searching for your next investment. All right, guys, in this episode of the DealGen podcast, I spoke with Raleigh Williams. Raleigh is an experienced entrepreneur who had a lot of success in his, early on in his career, starting and selling businesses, specifically trampoline parks. And, what he's learned from that experience is, and what we talk about on the show is not only what drove him to become an entrepreneur, but the successes and the pitfalls that he's learned along the way to launch his most recent endeavor, which is going to be Deal Maven, and it's going to be a platform that links buyers and sellers together, specifically finding the right buyers and then bringing sellers forward to basically be able to pick the right potential acquirer for their company. So really looking forward to watching and watching Deal Maven become what I think it's intended to be and what I think Raleigh is capable of building it out to be. But at the same time, I hope you guys enjoy this episode because there's a lot of good clips in here. So thanks. Raleigh Williams, what's going on, man? How you doing?
I'm great, man. How you doing?
I'm doing good. It's good to have you here. I know we've connected a couple times, off of a podcast, and are looking to start doing things together. We're both kind of swimming in the same space,
Yeah,
which will be fun to talk about right now, which is kind of that M&A world, buying and selling. So I'll start you off with that. It seems like in the 2023 landscape, with macro factors that are in place right now, the world is a little upside down in some areas, and buying things might seem a little crazy to investors. Selling things might seem pretty hard for sellers. Raising money might seem hard because of interest rates and stuff like that. But talk to me about personally. You're a guy who sold companies. You're a guy who has bought companies and invested, and you're a guy who actually helps facilitate those transactions too. So, what are you seeing right now in 2023 in regards to the landscape? We can kind of start off from the buying perspective, investing perspective.
sure. I think it's funny. I know a guy that is a real estate developer. He tries to do real estate development, and when 2019, 2020, he was always like, I just don't feel like these deals are penciling. Everything feels so overpriced. It's too expensive. I don't know how anyone's getting deals done right now. And I talked to him a couple of weeks ago, and he's like, there's just so much uncertainty in the market, and it feels like everything's going to go down. And so as I've had a relationship with him over 5 or 7 years, it there's always uncertainty in the future, and he's always found a way to use that as an excuse to not do deals.
Sure.
And I tend to be naturally kind of a perma bear. Like, I'm usually pretty bearish about what the future looks like, and so I just try to go knowing that that's my default mindset. I just try to find things that I'm excited about despite that. And perma bears are right once every 10 years, but there's still ways to make money, even if there's a decline. I think what I'm seeing high level is, depending on kind of the sophistication of the buyer, I think deals that used to make sense make less sense now. When you have treasury bills and kind of risk-free rates rising in terms of where you can allocate your capital, there's a higher expectation for returns to, the risk premium that you're going to take to be in a private deal or something that's less liquid than T-bills, whether you're in the real estate space or the business buying space. Um, I think the smart money, I'm seeing smart money move more and more into more hybrid structures, kind of mezzanine debt, taking more of a debt position with an equity upside than
Yep.
full equity side.
Yep.
Um, I see that happening more and more. And I think the people who end up getting hurt are people that want to run one specific playbook and aren't open to, figuring out structures and ways to make deals happen. And it may look different than the way deals look like in 2020. In 2020, when everything was kind of a little bit crazy, a lot of people wanted asset-backed investments. And I know me personally, like where I always say, like, that's an interesting opinion, but tell me what's in your portfolio. What are you actually doing? Not what are you advising? Like, where you actually have skin in the game.
Right.
And for me, in terms of the things that I look at, I like businesses currently that are smaller than the deals that I used to do, and very asset like I like online, digitally based businesses, business acquisitions, content sites, um, courses, membership things that no one is really looking at talking about conventionally. I like things that don't have a lot of capex required
Right.
and not a lot of fixed costs associated with it. Um, and so that's kind of high level what I'm actually doing today with my dollars right now.
Gotcha. No, that makes a lot of sense. And going back to, being kind of that investor that, like you said, you've heard for years now, finding every excuse not to do a deal. I think that there's certainly something to be said about that, right? You got to be, I mean, at the end of the day, the best investors, I think, are ones that limit the downside as much as possible. So they always look at, you always hear, the Warren Buffetts of the world, who, they focus primarily on the downside. What's the worst case scenario here? And then work backwards from there to figure out whether or not, they're going to invest their money the right way into the right things. But at the same time, I think the best investors in the world are also the ones that are most flexible and the most, open minded to change and
Yeah.
realize that, there are macroeconomic, political things that are always going to be going on no matter what the circumstances. And sometimes it's going to be a bull market and things are going to be running and you can run that direction faster. Sometimes it's going to be a bear market and you're going to be fighting some headwinds. But no matter what, you can always find a way to move forward. You can always find a way to, look at how you structure deals differently. You can always find a way to, like you said, going from being an equity investor to now maybe we're going to be more of a lender because there's more opportunity in that from a debt perspective and it's a safer investment. But I think that the people who are open minded in times like these to switching, they don't have to shut their business down. They don't have to lay off, let's say you're a big investment organization. You don't have to lay off employees just because, the macroeconomic landscape isn't what it used to be. You can pivot. You can, look at ways. All right, what's our current portfolio doing? Is there room to raise, let's say it's real estate, is there room to raise rent? Is there room to cut out expenses on things that we were paying? So my point is, I always when I'm talking to investors, people who are buying things right now, a lot of my clients are private equity investors, and they're not slowing down, one iota. I think they have to be careful about where they put their capital, and into what they're putting their capital. But when the right opportunities come, they're still following those, kind of traditional systems of evaluating a deal and figuring out, yeah, maybe 2 years ago they were going to offer 10 million, now they're offering 9 or 8, but they're still offering, they're still making offers, they're not
Yeah.
stopping. And
Yeah.
I don't think in any, I don't think in any field, um unless something's going completely haywire, you should let like a macro thing stop you in your tracks. You should just try and figure out, okay, this is something I have no control over, how do I power through it?
Yeah. There's a good, one of my favorite investing books is, it's called how I lost $1 million. And it's about this guy who was crushing it. He used to work for the Chicago Mercantile Exchange, trading commodities and stuff. And he had this trade that he was really excited about. And um, he kind of convinced himself of this kind of investment thesis that he was going to move forward on. And every piece of information that he was getting, call it, say it was a corn trade. And so he would get kind of this counter piece of information that, the weather patterns weren't looking good for the corn yields, whatever. And every piece of information, he would fight against it. And kind of the overall premise of the book is that is to have strong convictions loosely held. And when you convince yourself of a story on what you're going to do with your money, it's really hard to pivot away from that story, particularly if you're very vocal with the story. And I just said I like asset light internet businesses, right? And then as I start getting information that cuts against why internet businesses are a great investment, I start pushing against it because I've committed myself to this story that this is what I'm going to do from now on, even as the information starts mounting
Sure.
against me. And so the wealthiest guy that I personally know that I have a great relationship with, when I ask him what he's doing with his money, where what he sees, how he's reading the tea leaves, he's never told me one time what he's doing because he doesn't want to get someone's counter opinion that he has to then start defending himself. And he also doesn't want to persuade me to have me lose money. And, I start trying to follow him into deals that he knows a lot more about that I don't. And so I always look at, again, similar to how do you minimize the downside? How do you do a deal that if you're right, you get rich, and if you're wrong, you don't go broke? And how do you stay nimble and open? Back in 2020, people were wanting to get into deals because they felt like inflation was a tax on their cash, right? And they wanted to put their cash to work.
Mm-hmm.
And, in a pretty short order, it feels like the correction that will come will be a greater correction than what inflation, that it's smarter to hold on to cash than to deploy it and kind of wait and see. And so I think just learning how to, know what a good deal smells like and be willing to move on it despite uncertainty, because it's always going to be there unless you're doing T-bills.
Yeah, yeah, yeah. No, I think I love that analogy from that book, and I think that you got to be open minded in both ways, right? You got to be open minded to the idea that the things around you are changing, but you also have to be, open minded to the idea that maybe there's a better way at looking at what you're doing. Like you said, once you convince yourself and once you tell a story on, and you convince yourself of a story on what you should do, then it's very hard to go the other direction. And once you're already in it, it's even harder. Once you've actually,
Right.
maybe you've started, maybe it's already started making money, and now the idea of shutting it off or stopping it is just like in your brain, you can't. You're like, I can't go back. And
Right.
in reality, you probably don't want to find yourself in those scenarios. You probably want to find yourself, making those investments where, again, in the ones that you're telling me that you're actively making, it seems like you have some control over the growth.
Mhm.
You have control over, the asset. A lot of it is in your hands, and because it's not a lot of capex up front. If something were to go wrong, if something were to shut down, if something were to come out of nowhere and be put a disadvantage on what you're doing, it's not gonna wipe you out by any means. It's not. It is probably one of those things where if you needed to stop one particular investment, you could, because you're in it for less than, you're not going above your means. You're probably diversifying your portfolio. And that's where I think, the best kind of VC or private equity investors also, that, there's diversification within their portfolio. They're going to make bets that don't always win, but if they make 50 bets and two of them don't go according to plan, it's fine to have that kind of in place where it's like, hey, these are heading south. Let's have a system in place where we can get back as much money we can, exit particular position and then refocus on where we're winning, rather than go all in on one company and have that happen. And now it's like you're in a position where you might not be able to crawl back.
Yeah, I the way that I personally minimize that risk is I just focus. And again, it's not brain surgery to anyone who's in the private equity space. I just focus on what the cash flows of the business are, and I price in zero equity appreciation in the deals that I look at. And what does the kind of post transaction capital stack look like, and what do the cash flows look like? So I typically try to bring very little, if almost no, leverage to a deal. Leverage creates weakness in every circumstance. You can't something with zero leverage. You don't get as good of returns, but you don't go out of. It's really hard to go out of business if you don't have either on the balance sheet leverage or off balance sheet leverage with leases and vendors and working capital and revolvers and all those things. All those things can be, growth drivers, expanders, which are great, but they're also, it only takes being in a deal one time with a heavy lease or a heavy personal guarantee, being on the wrong side of a piece of debt. It just takes doing that one time to never do it again. And, I'll take slower growth, more consistent growth, trying to find businesses and assets that I have a long time horizon in, and just go slow and steady. Slow and steady wins the race is kind of the approach that I've tried to take personally, individually.
Right.
And
right.
Whenever I'm in an advisor capacity and someone's like, it's just so easy for people to tell themselves the positive story of doing a deal, of how great it can be if they ultimately buy the thing. And a lot of times they'll put pressure on themselves. Not private equity. If they're raising money, they have to deploy it. Otherwise, that's the business that they're in. But
sure.
On the more kind of on the smaller level, doing a deal is like getting married. It's great to be in a great marriage, but it's better to be single than to be in a bad marriage.
That's a great way to put it. It's a great way to put it.
And when you've done a bad deal, it's like being in a bad marriage, and it's hell, and it's not fun, and you got to, dig in and figure out how to get yourself out of it,
Yep.
which isn't great.
Agreed. So, in our previous conversations, we've talked about Deal Maven, the idea that you have, when it comes to building out that platform. And, we don't have to get into the specifics of what, Deal Maven is going to be right this second, unless you want to. But my question for you was more going to be around the M&A process. So you've been on both sides of that coin, right? You've been a seller, you've been a buyer. What holes did you see in the M&A process that led you to want to create something like Deal Maven?
I've been a lawyer in the deals, which didn't give me great visibility into what holes, you're just kind of transacting in an advisory capacity. When I was selling my first businesses, which were entertainment businesses, trampoline parks, escape rooms, brick and mortar businesses, the gap that I saw, I did the transactions myself. I didn't hire an advisor. I interviewed multiple. I talked to some bankers, and I felt like I wanted to do the deals myself. And so the gap that I saw in that process on the sell side was I would get inquiries, kind of inbound inquiries, and it was really hard for me to vet the quality of the buyer pool, one inquiry versus another, depending on what. And again, these were in aggregate, it ended up being a $26 million transactions, but it happened over multiple transactions, and they were usually $2 to $3 million deals, that we did over time outside of one big real estate deal that we did. Yep. And so from a seller, I spent a lot of time talking to people that, want no money down, all seller finance, just kind of tire kickers that were a waste of time. Some people wanted an SBA process, but I felt like I wasted a lot of time talking to buyers that weren't very qualified, and probably, and a couple times almost lost deals because I misallocated my time and I didn't spend the right time with the right people. And in terms of people that could actually get a deal done and had the capital to do it. And so I felt like on the sell side, having visibility into who the buyer is was a frustration of mine. On the after I sold those deals and I moved into a more buyer capacity, I'm much more of a net buyer than I am a net seller. And I think every buyer has the problem of deal flow. That's the big elephant in the room, is how do you actually get deals coming to you? And so what most people
Sure.
do is they, particularly someone like me who doesn't come from a really organic marketing background. I spent $5,000, $10,000 on a nice website with the background of New York, and we do deals, and you work on the copy and what's the criteria, and you do all this stuff to try to generate interest and potential limited partners, and also, obviously getting deals done, getting inbound inquiries. But you have this site that kind of sits out in the middle of nowhere and it's not tied to anything and it's not generating any traffic. And so I, in law, I learned the golden rule is he who has the gold makes the rules. And I was very frustrated that I had the gold to do the deals, but I could not find the deals. um, and and so that was kind of the problem that I set out to solve on both sides. Is on the sell side, 50% of deals fall through post LOI. 90% of businesses that are on market right now, whatever on market is termed, particularly on the SMB side, sub $10 million enterprise value deals, 90% of those deals fall through. And so Deal Maven what set out to try to solve that, and kind of the way that I circled around solving that was focusing on the buyer, focusing on a platform that focuses on who the buyer is, instead of what the particular asset is, who the buyers are, what's their criteria, what are they looking for, do they have the capital, vetting the buy side of the marketplace, because buyers are kind of the things that don't change that often. And then, on the sell side, whether it's a broker or an individual entrepreneur, I also felt like when I was looking at potentially raising growth capital or not really knowing what I wanted to do, from the entrepreneur's perspective, sourcing that capital, whether it's exit capital or growth capital or debt capital, whatever it looks like, how do you find the people that are willing to transact that, and what their criteria is? I don't want to waste a bunch of time. If you're growth capital for biopharma, like, you're not going to give me money for my trampoline park, and so I don't need to send a deck and do your criteria and like put in your inbound inquiry. And so that's what Deal Maven has kind of morphed into, and that was really what we started out trying to solve. Was my thesis is that buyers will get more deals if there's one place that sellers can come to and kind of sort through a database of buyers, what they're looking for, and how qualified are they.
Yeah, well, it does start with the buyer, and that's where we start here at DealGen too. It's all about going out and finding the right buyers who we know are able to transact and willing to transact, and they want to do a number of deals every year, and then going and finding them the opportunities to hopefully invest in. And I think that what was that quote you said in law? From the about the gold.
He who has the gold makes the rules.
He who has the gold make the rule. I think it kind of sums up what we've been focusing on right now too. My business partner came from the sell side, and he was like, I'm working on two, maybe three, and if it's three, I have no free time deals at a time. And so when he's representing a seller, he was like, yes, there is at the gold at the end of the rainbow is it could be a big pot, but a lot of the scenarios that you go through when you're trying to sell a company are out of your control. Especially if the buyer, you bring the right buyer to the table, and then it ends up not being the right deal, or they can't get financing, or you're in it with the seller for 6 months, and then on month 6, day 2, his spouse decides that they don't want to sell the company anymore. Maybe they should relook at it in a year from now. And so you've put all this work in, and now that got pulled, the rug just got pulled from underneath you. So he was saying, when we were starting DealGen, it's like, let's control the money. Let's control the buy side of things. Let's approach the market as the buyer. Let's approach sellers as, hey, we're here to buy you. We're not asking you for anything. We want to buy your company. And or you approach the intermediaries of the world, the investment bankers, the M&A buyers, and say, hey, we're in the market to buy this. And just a lot friendlier of a conversation, especially at the beginning, where it's like, hey, you're looking to sell something, we're looking to buy it. Let's see if we can figure it out in the middle. Um, but I think that your platform, you have the 100% the right idea. If you were to get, let's say you had a faucet of deal flow where you had sellers that wanted to be on it and they wanted to put their thing on there. Well, if there's nobody that's out there that's qualified to buy it. You get a bunch of trampoline parks, and then you have a bunch of high net worth individuals that come from, like you said, biotech. That's not really matching up anybody. It's just
Right.
sellers and buyers, and there's no nothing in the middle. So I think if you go about it from, hey, let me build out this platform that's very user friendly, and get the buyers to be interested in it, and then start slow, knowing what they're looking for, knowing that they're capable of buying it, and then going out and bringing that forward, it's just going to start to snowball. Because the one thing that's going to get people on the platform is that they're going to, knowing that deals are actually getting done on it. And
Right.
that's linking the best buyers to the willing sellers.
Right. Yeah, and I've seen it work. It worked for me individually. Actually, somebody came on to the deal that I bought at the end of last year. The kind of internet-based business was a deal that that she, I don't know how she found Deal Maven, because we're not really actively out promoting it yet, but she found Deal Maven. She listed her business and she found me on Deal Maven, and she pinged me, and typically, all other marketplaces, the buyer is the hunter, and the owner of the asset is the hunted. And so you as a buyer, you either have someone like DealGen that's going out and hunting for you, or it's your job to go out and hunt every single day and reach out to these people. Um, and and so it's trying to give a tool to the sell side that allows them a different way to transact outside of just putting on the marketplace and receiving inbound, deals, and then sorting buyers amongst the masses, and
Mm-hmm.
who really has a background. And it when you have that structure where you have more transparency on both sides of the deal, it allows you to get more creative with the deal structure. Like you can do a partial or a majority, or a partial transaction, a partial purchase, knowing, um, for instance, I would have sold 20 or 30% of my trampoline park business to someone if I knew that they had an operating history in trampoline parks and that's what they did. Right. I
Sure.
wouldn't sell that same 30% to a lawyer who's looking for a passive investment in an asset, right? Because it wouldn't have
Right.
solved the problem. And so,
Right.
it allows for deal structures that a lot of brokers, advisors, they don't like. I talk to a lot of business brokers that if there's a partner issue and one partner wants to buy the other partner out, a 50% deal, brokers don't want to touch it. They don't want, there's regulatory risk. It's a hassle to try to line it up. You got to build a new it's a more complicated deal, but a lot of times it's a deal that makes sense, and can make economic sense on both sides if you can just get those parties to connect in the right circumstance.
Yep. I love the strategy. I think that, being able to be a seller and go on and see a giant list of potential buyers on there, sort through them, categorically, figure out, okay, does this person make growth equity investments? Are they a buyout firm? How do they go about doing deals, and then approaching the market from that standpoint, knowing that they might like what you have if you're a consumer goods company, and this particular buyer you found, makes minority investments into consumer goods companies. Well, that you'd craft a deal differently than you would for the family office, like you said, that's looking to just purchase a slow growing passive investment.
Right.
And so there's a lot to be said around that. There's a lot to be um, but I think that approaching it that way, learning about the buyer, building out their track record, showing the sellers that like, hey, here are your options, for buyers in this particular space, is going to help facilitate transactions because it is going to bring more opportunities to the table. And they could get an offer from the person that wants to buy 30%. They could get an offer from the person that wants to buy the whole thing, and then they can determine which one they might want to take, if any. But just going to market blindly as like, hey, I want to, I'm looking for a buyer, um, might not help anybody because the
Yeah.
qualifications are just always going to be different across the board. Um, so look, trampoline parks, right? We don't have to spend too much time on this, but like how, when you got into that business, what drew you to that, and what what type of I guess what drew you to that? Did you have a background in it prior to launching it? And then, how did you personally look at that as an opportunity that you, with your skill set, could grow and eventually exit? Because you bought it, operated, sold it, so someone who might not be familiar with that type of asset, why did you choose that particularly, and how did you go about operating it to a point where you could exit?
Yeah, I at that time I was practicing law. I was doing mergers and acquisitions, and I hated that job. I just couldn't stand. I was a practicing lawyer at one of the biggest firms in the world, and I lasted there about 9 months. Um, and I so the opportunity, I a buddy sent me an article about the unbelievable. It was a Market Watch article. It said the unbelievably lucrative business of escape rooms. Prior to law school, my brother and I had started a trampoline park business that I decided I didn't want to run. We just started it randomly, like no background in it. My brother had a young kid and felt like there weren't a lot of places to take her in order to pass the time. Utah gets pretty cold in the winter, and so there weren't a lot of options. And so I started that with him prior to law school. I sold my interest to him to go to law school, thinking I'm going to go be a big time lawyer. I hated practicing law. And there was this new business type, escape room thing. We had kind of seen in that 4 years that the trampoline from a family of lawyers. My dad's a lawyer. There's a lot of lawyers in my family. And so there was kind of this, when the first location did well, we thought, let's tap the brakes and let's not really scale this thing the way that others did. And so we didn't grow the way that we could have. And we saw others come into the market and really start growing the trampoline park business. And then the escape room thing started to happen. And we thought, maybe this escape room thing is something that's less risk than the trampoline park business. Let's see if there's something here. And I just hated practicing law. And so to me, I had no background in escape rooms. I found a business in Europe that was pretty successful in the escape room business. And so I bought a license, I basically bought their IP for the United States. I said, let me take all your rooms and designs and like, let me pay you to just know how to build these stupid puzzles. I don't know how to make
Right.
locks go to new locks and whatever. Um, and so the idea was to come in, run the escape room business, and then the escape room business plus the trampoline park business was pretty synergistic. And then we had basically people, capital partners that were like, hey, let us put money in this and we'll go and operate our own. So that was kind of the background on how it all kind of started. Was I knew that I hated practicing law. And so the opportunity cost of something failing was low because I knew I was going to quit and do something else. And it felt like something that I had I didn't have a massive background on it. It wasn't it wasn't a spreadsheet decision, I guess. It's not like I looked at a model and I said, this thing could really take off. It was much more of
Right.
an emotional decision of,
Right.
yo, I hate what I'm doing. and and so like if you give me like I feel like I'm on a boat, like if you give me it doesn't have to be a cruise liner, like give me like a little log that I can jump to and like I'll hold on to the log and I'll figure out how to turn that into a canoe on a long enough time horizon. And then, um, I think the thing that I try to recreate and the businesses that I invest in now is I think if you have at least one person that is that pot committed to the growth of the thing that you're working on, like I think it's really hard to fail at that. I think the way that most of these businesses end up getting messed up is entrepreneurs by nature are very scatterbrained, they're shiny object, and they start working on something and then their emotions get in the way and they start thinking that they want to work on something else. And
Yep.
it's a function of focus more than it is a function of economics. And so trying to incentivize people to stay focused on the thing like I did and in that trampoline, I focused on it exclusively for 5 years until I got to the point where I could feel myself wanting to focus on something else. I could feel myself not answering the calls as quickly from my general managers and from my insurance people and from I could feel that the business was grinding on me
Yep.
in a way that it hadn't previously. And that's kind of when I knew that it was time to start planning for the exit
Yep.
path before the P&L started showing that I was checked out. You know what I mean?
Well, yeah, there's a lot of good advice in there. I think, at the beginning when you're talking about how I wasn't expecting that answer of like, hey, I was just burnt out from doing what I was doing. So I decided to just go in, jump kind of headfirst into something I knew nothing about. But there's a lot to be said about that. If you have energy and desire and, a level of commitment that you're not, it's bottled up inside you. Um, yeah, I think if, as long as that's focused in the right direction, it can go a long way, especially if it's like, hey, I hate doing this. So, like you said, just give me something else that I can pour, all the time. I'll take all the time that I'm putting into this law job, and then I'll take, the passion and the energy I am not using right now because I hate law, and combine them. It could be into anything. I'm
Yeah.
gonna, I have the willingness and desire to stick with it long enough to make it work. It's a good story because you hear a lot of businesses that get started from someone's experience, or they had an experience in a particular industry and then they launched their own business that was taking advantage. They saw a hole in the gap of an industry they already knew about. For you, it was just, raw kind of entrepreneurial energy and latching it onto a growing industry and just making it work and figuring it out and doing it, kind of doing it live. And I like that. And then on the flip side, I completely agree with, as long as someone's focus is on growing the business and they have, I think it requires not only focus, but it requires a they have the means and they have the permission of the other
Mhm.
parties that are involved to be able to grow it the way that they see it, how it needs to be grown, the way it needs to be grown. From my experience, with operating a business with three individuals, I think that we all kind of got tired of the daily operations of it because no one, the individual that was working on the business more than the rest of us, um, wasn't given really a long enough leash to be able to do the things they needed to do for the business to succeed. So they were allowed to do what they were doing on a daily basis to make sure the business doesn't fail. But when it came to like, hey guys, we need to invest X amount of dollars into this process, or hey guys, I think we should refocus all of our energy on this hole in the market that we're not filling right now. We didn't really give them the resources to do that because we were just worried
Yeah.
about a return and being able to stay afloat. And so it's someone's full attention who gets the process, gets the vision, and can drive the boat there. But it's also they need the right equipment and they need the right boat to be able to drive. If they're not If it's like, hey, we want you to make it here to here, but you have a paddle board and it's, you know, a thousand miles you have to cross. It's, how the hell am I going to get there? I have no, you're not going to give me anything else to do. So I completely agree though. Powered, an empowered, dedicated person can make money doing almost anything.
Yep. And I try in the deals because I don't like doing deals where the operational onus of the business falls to me. So either if it's a buyout deal, then I got to find an operator who's going to run it and be excited about it. And I try to be overly generous on the front end in terms of I'm like almost exclusively economically driven. I care very little about contribution or making an impact on the world. It just doesn't drive me. I just don't
Right.
care.
Right.
And
Right.
and so I try to make sure that the person I try to understand the incentive of the operator the person who's going to be the CEO. What is it that they actually want? If it's economics, great. I can speak that language very clearly. And I try to align the incentives as clearly as possible. So that way they know that this opportunity is the best opportunity. They have to be excited and they have to think that it's going to be fun, and they have to know that this thing that they're working on will be their path to fulfill their dream, whatever that dream is. If it's giving back to the children in Africa, I think that's great. Whatever it is, if it's contribution, if it's economics, if it's whatever the driver of the person is, they have to know that they will meet that driver in their position as the CEO of the business, and that I am there as a support person to help them achieve their dreams and and for me, I try to be very clear that my intent is an economic intent. And if they want to retool and repivot the direction of the business, and that's going to meet my economic needs, I've been in situations where I felt handcuffed, not from I've never felt handcuffed from capital partners, but I have felt handcuffed from operating partners, co-partners, where you start
Sure.
a business together. And I always say, you know one, show me the incentives and I'll show you the outcomes, which I stole from Charlie Munger. And two, like, he who has the strongest opinion wins and gets to do it. So if we're looking at a website together and someone's like, it really needs to be pink XYZ, whatever, I think this branding's all wrong. I say, I love that for you. Go do it. you
Right.
know, like, you have a stronger opinion on what this branding should look like than I do. So it is now your assignment to make it how you want it, because people ultimately, it's not about, I can win. I can win with a C strategy, a C strategy with energy and that people are excited about. That's so much better than an A plus plus strategy that the people who have to actually do the work aren't stoked about, even though
No.
mentally they're on a spreadsheet. It makes the most sense. It just doesn't, because they're kicking against the pricks every step of the way, and they end up not bringing the energy that's needed.
You're bringing up a lot of really good points here. And ones that I've experienced personally too, where, you'll be, eh, let's say the loudest one in the room, because where businesses fail and where people get off, not on the same page, is when the loudest one in the room with the strongest opinion, um, expresses the opinion and then wants someone else to do it.
Yeah.
And it's like
Mm.
that
Work.
that doesn't work, because like what you're saying right now, you want the website to be pink and blue and shiny. Like, that's something that you really care about. I don't actually care. If I want the website to be great and I want it to serve its purpose, I don't care about the schematics of it and how they lay out and everything like that. So if that's what you care about, go do it. But if you're going to say that's what you care about and then it's my job to go do it, I'm out. I mean,
Yeah.
I can't. I'm not gonna, because I don't care. And that's what it all boils down to, is like, the person that's doing their job needs to be incentivized to do it, and they need to care about doing it. And like you said, it needs to fulfill something, whether it's their end dream or whether it's just that in the moment passion of the website needs to be green, or, pink and blue. They need to understand internally why, and they need to, use that and channel that energy towards getting it done and care about waking up every day knowing that they're going to take the next step in order
Right.
to achieve that. Versus if you're going to assign that job to someone who isn't incentivized and doesn't actually care, then what do you think is going to happen? You know,
Right.
it's gonna crash and burn, and I've seen it before, um, a few times, and it ended up being the demise of some of the investments that I was involved in. But I do have one more kind of question for you. It's more of a just overall personal personal question from well, it doesn't have to do personally with you, but just more of an opinion based thing. So if you were to give advice to a smart driven college student right now who's about to enter the real world, what would that advice be? And what advice should they ignore?
That's a good question. So I used to, when I was in law school, I used to advise or college kids that were at the University of Chicago, which is a great undergrad program. They're all smart kids.
Yep.
Um, and so I would see these kids that were wanting to get into law school. And so I was mostly advising them on the steps that they needed to do to, get into the law school game and how to do well on the testing and all this crap. I think the 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 problem with college kids, there's a lot of problems with college kids, but the problem with advising college kids, the advice that I try to give them as much as possible is to listen to fewer and fewer people's advice. um,
Yeah.
and you have to start getting to a point where you start trusting your intuition, and that the people that are ahead of you really don't know what they're doing, and they have no idea what they're doing with their lives, no matter how old they are and no matter how much it looks like they have their shit together. They don't know what they're doing,
Everyone's
right?
always just trying to figure it out every day. Like they wake up every
Like,
day. Everyone, no matter where you're at, they have checklists and they're trying to figure out, hey, what am I going to do today to add to whatever, And so
yeah,
I agree.
I wish that when I was 22, I'm 33 right now. I've made some money, and I wish that if I had known at 22 how uncertain I still am at 33, like what I'm doing with my life, I wish that I looked at more people and be like, you guys don't know what you're fucking talking about, and that's okay. But when a college kid comes to me now, I say like, try to fail at the thing that you're the most scared to do this weekend, like, because everyone, if you go to Harvard, you have this story that you've built, so that way everyone approves of what you're doing with your life. I'm going to go to Bain Capital, and then I'm going to go to GSB, Stanford Business School, and then I'm going to da 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 da. And you start casting the story of what your life is going to look like with all those things. I spent a lot of time and a lot of money going to great schools, working at great firms, and I was miserable every step of the way. And the shocking part of it was just how divergent it was from my expectation of that. And I wish that I had just, before I went to law school, and now I'm glad that I did, everything works out. I have no regrets about the path that I took, but I wish that I had started failing at something. I was so scared to fail. I was so
Yeah.
scared to be wrong about something,
Right.
thinking that would, forever take me off of the path that I ultimately wanted to be on to be successful. Um, um, that I think it's taken me, I thought, oh, well, once I get a really prestigious law degree, then I'll be okay to fail because I have this piece of paper that says that I don't suck. But it's more confirming, right? You like have higher opportunity costs.
A lot of
And
it has to do with like other people too. You're afraid to fail because it's like other people, what other people might perceive. And at the end of the day, they don't care that you failed.
I,
They
I
don't care.
distinctly remember being at a law firm. My dad was a lawyer. I was at a law firm that was a really prestigious law firm. And I remember thinking, I fucking hate this job. I can't stand this job. But what is my dad going to say when I quit? He's going to be livid. Um, and he was livid. We didn't speak for a year after, but I distinctly remember looking at partners. Law firm is very easy because it's very hierarchical, and you can see what your path is going to look like down the road. It's easy. You can see what a 40-year-old partner's life looks like.
Oh yeah.
And I distinctly remember thinking, when I'm 40, my dad's going to die, and I'll be a partner at a law firm making $1 million a year, 50 pounds overweight, like all these guys are. And I'm going to be miserable. My dad will die, and I'll be a 40-year-old trying to figure out what do I do with my life? Because the only reason that I was here was to not disappoint my father. He's dead now. So now what? Now what am I supposed to do? And it was that thought that, like, he's going to die one day, not in a macabre, I don't hope that he dies, but he will die. And every decision that I make, hoping that it gets my dad's approval or hoping to avoid a fight with him, right, was ultimately, I'm glad that I reset. I went from making 180 grand a year as a lawyer to zero as an entrepreneur. And I'm glad that I reset that clock as a 26-year-old instead of as a 42-year-old.
Yep.
And so my advice is to not take advice.
Good advice. Good advice. It's good. No, I mean, not being afraid to fail for yourself. I mean, I think failure is the how you learn the fastest and the best way, and I think that taking, being methodical about what you might fail at, like not going completely all in on the first thing that you know nothing about, is probably a decent idea. But at the same time, if you want to, you're more than welcome to, because going broke might be the best lesson you've ever learned.
Yeah.
And so, again, I guess I'm partially giving advice right now, and then I'm taking it back because I'm like, do whatever you want. Just channel your passion, your energy towards, like you said, what you're most afraid to fail, or what you're most excited about, and see where it takes you. And don't worry about, there's that old saying about, like, when you're in your 20s or 30s, like, all you care about is what people think. And then as you age, and you get into your 60s, you realize no one cared at all about,
no one's thinking about it. They're thinking about their own,
they're thinking about their own thing.
Shit. Yeah.
So no one's even thinking about you. And so as soon as you realize that, the faster you can kind of get over that, like, hey, this is all okay. I remember just one last, dad story too. I remember when I graduated school, my dad kind of painted a picture. He said he knew a guy who could get me a job in government, because I didn't really know what I wanted to do. I loved real estate, but I didn't really know, I didn't have a lot of connections to it. I didn't know where to start. So it's like, hey, I know a guy who can get you this government job, and you'll start off making a good salary, and then, when you retire, you'll have this amazing government pension. And I remember hearing him say those words and being like, and to him, it sounded like, it's safe. So I'm getting my son into a safe situation. And for me, I was like, that's the last fucking thing I ever want to do. And so
Yeah.
that opened my eyes to what I didn't want to do. And it kind of helped carve that entrepreneurial path of, like, okay, well, I know that would be the last thing that I want to go towards. So let me try and forge my own path here. And again, at the beginning, it was like, they're always kind of concerned about, not safety, but like, are you doing the right things? Are you making enough money? Are you going to be able to live in you? And as long as, again, you're channeling the energy towards, energy and passion toward a direction that has some upside, I think that you can take anything and grow it into a multi-million dollar opportunity, or something that's going to take care of, you and all your needs in the future. And that's how I think I'd wrap it up, really, at the end of the day.
I got nothing. I second the wrap up.
Awesome, man. Well, thank you for coming on here. I appreciate it. I'm looking forward to doing some deals together in the future, and staying in touch on everything we got going on.
All right, bro. Appreciate the time. Let's go do some deals.
Sounds good, man. See ya.
All right, man. Have a good one.